Hello folks. Today we're gonna talk about order blocks, how use it in day trading and its combination with price action. In this video we learn, what is an order block? How identify valid and high probable order blocks. Important points about trading order blocks. Different types of order blocks. And finally, how to trade using order block. So let's start. Order blocks are areas with significant volume orders placed by large trading institutions and large funds. More specifically, order block is last upward candle or series of candles before a down move, which is bearish order block, or last downward candle or series of candles before an up move, which is bullish order block. So the key point to find order blocks is to find specific points in market where price has experienced a substantial upward or downward move. So when price eventually breaks out of the order block and then retraces back to its range, we see this pullback as an opportunity to take a position, to take advantage of big market orders that are expected to be executed by large funds in that area, which will reverse the market and reject the price. Now let's see how to identify valid and high probable order blocks. Not every order block is an effective and high probable order block we are interested in. So these are conditions of a valid and high probable order block. Must take or grab liquidity. When an order block had taken liquidity, that means the money already brought into market, and there is no need for price to cross and break that order block again. In this situation, you are in same side with smart money and large funds. Next condition is to have change of character after an order block. When price breaks its last recent swing high or swing low, we call it change of character or break of market structure. When we see change of character after order block, it means the market structure has changed and has new directional bias now. Have inefficiency or fair value gap afterward. First, let's see what is fair value gap. Imagine 3 candles. When the body of the mid candle is not completely covered by previous and next candle, we call this area inefficiency or fair value gap. Fair value gaps are one of the most important points of interest in market structure. You can find important points and techniques about fair value gaps and how to trade them effectively on fair value gap video in our channel. And finally, price get far from order block aggressively. This item is less important, but just remember, the faster and stronger price gets far from order block, the stronger that order block is. Now, let's check out some important points about trading order blocks. First, as I said before, an order block can be series of candles, not always a single candle. It depends on the time frame you're watching price. This is what lots of mentors teach incorrectly. For example, this single order block candle on a 15-minute time frame becomes 3 candles if you check it on 5-minute time frame. So we consider all 3 candles as the order block area. You can see price didn't reach the first candle on the 5-minute time frame. So make sure your priority always be higher time frame order block. Next point is that there are 2 price points in order block candle which are more important and effective than other levels. First one is order block candle open price, and the next one is the midpoint or 50% of the order block. So, when price reaches order block area, we can find if the order block rejects the price or not sooner by watching reaction from these 2 levels. Also remember, if we expect our order block to be effective and reject the price, we don't want to see any body close below order block midpoint. Another point is that, the longer the market stays away from an order block, the lower the chance of a successful trade when it eventually returns to it. So always focus on recently created order blocks to take position. Next is that, always trade order blocks that are in the trend direction, or more specifically, in direction of the last break of the structure. This simple rule will highly increase your trade's win rate. And finally, it's better to consider order blocks one-time use, and only use unmitigated order blocks to take trades. Now, let's check out different types of order blocks. First is normal order blocks, which already explained. Next is mid-movement order blocks. Order blocks are not always at the end of swings, they can also form in middle of price legs. They are opposite candles between price legs, which act exactly like normal order blocks. The market creates them to use as support or resistance on pullbacks, to continue its move in major direction. So, if, for example, we have bullish trend, downward candles act as mid-movement order blocks and support the price. And if we have bearish trend, upward candles act the same as a resistance and push the price lower. Another type of order block is breaker block. When a valid order block fails to reject the price and market goes through it, we call it breaker block. This cross-through order block causes a shift in market structure and usually happens when market want to tap into other higher time frame key levels. Breaker block is usually most effective when price breaks through it with large momentum candles and then tiny pullback to it. Simple explanation for breaker block will be like this. In bullish breaker block, we have lower high, lower low that takes the liquidity of last swing, and then price breaks through the high and after that pullbacks to our breaker block. On bearish scenario, we have higher low, then higher high which takes the liquidity of last swing, and then price breaks through the last low. So we wait for a pullback to breaker block to enter a position. Remember, breaker blocks are so strong and valid. Number 4 is mitigation block. Mitigation block is similar to breaker block with a small difference. In mitigation blocks, price fails to create lower low on bullish scenario and higher high on bearish scenario, which means last swing fails to take its previous swing's liquidity. The way we use mitigation blocks has no difference with breaker blocks. And finally, last type of order block is rejection block. If the wick of the order block candle be twice of its body, we call the wick rejection block. Here, instead of all the order block candle, we just mark the wick and wait for a pullback to the wick to take position. The reason that why rejection block is effective will be so long and can be a complete video, but if I try to explain shortly, I can say when you see the rejection block, if you change your time frame to the lower time frame, you will see that the rejection block is actually in strong order block on lower time frame. Now that we know almost everything about order blocks, let's see how we should trade using order blocks. In this example, you see that market takes the liquidity from previous low and rejects from there. It gets far aggressive and crosses the last swing high, which causes the shift in market structure. Also, we can see fair value gaps that created because the aggressive move. Now we know that we have an effective order block, so we mark that and wait for a pullback. When market touches the order block candle range, we enter a position. We stop loss Bellow the order block candle. Our first target will be the last major swing high before the pullback move, and next targets will be next swings and liquidity levels, based on market structure and our analysis. As you can see, just until our target, we have easy high profitable trade, with perfect risk to reward, with absolute zero drawdown. Let's see another example in bearish scenario. As you can see, market took liquidity from an old swing high and rejects from that. The move is aggressive, so we wait for a shift in market structure, and also look for fair value gaps to see if they formed or not. Now that everything looks great, we mark our order block candle and wait for a pullback. But as the wick of the order block candle is about twice of its body, we can also take that as a rejection block and only mark the wick and take position from that. But remember, you can easily enter on order block candle, but with a little higher risk. Market touches the wick and we enter our position successfully with stop loss above the order block candle. We can aim for different liquidity levels, but as I said before, one of the major targets will be last major swing, which pullback move started from there. You see how easy and fast market hits our target, with perfect risk to reward and absolute zero drawdown. Now you should go on your charts and find similar examples and practice, before take any position with live money. Thanks for watching.